Good afternoon and welcome to our second quarterly pricing webinar of the year, where we'll be looking at price movements in Q1. So today we'll be looking at motor and home insurance in the first quarter since the regulatory changes took effect in January. First, a little about Pearson Ham. So we are pricing consultants and our mission is to help our clients improve performance through better pricing. And we do this across a number of industries and in a number of different ways. So recently in insurance, this has included developing pricing strategies and updating optimizations, taking account of back and front book dynamics, factoring in market and competitor changes following the regulatory changes. Helping clients become more agile in their approaches, including systems, tools, data, analytics, strategy, process, and governance, and thinking through multi-channel approaches, so where insurers are both wholesalers, dealing directly with brokers, and also selling to the end user, the consumer. So how do we manage those different sales distribution channels? We also track daily price movements in the market, and this is the data we'll be looking at today. If you'd like some more information about that, then I'm going to publish a link here in the chat, so hopefully you can see that. So please feel free to click on that, and you'll be able to find out some more information there. Okay, so I'll go through a little bit on the methodology first. And then we'll look at motor insurance and home insurance, and then looking ahead, and that will be covering both motor and home. So our data that we're looking at today comes from our consumer panel price tracking. And this is a panel of real people that we've recruited and whose real details that we use to run quotes through the comparison site. So this includes the specific vehicles and other kind of behaviors and usages. We run quotes daily through the big four price comparison websites and update our reporting and data every day with the previous day's price movements. We have a run scheduling, and we make sure that the panel is constantly being refreshed. So we've got new people coming in, but we always have the same people running on consecutive days. So there's always a day-on-day comparison for the same profiles. So we're able to give that like-for-like view. And in order to ensure accuracy, we carry out data cleansing, remove outliers, to ensure that what we're reporting is reflective of actual market changes and not as a result of data processing or data collection or some other unusual pricing rules that might be impacting based on volume of quotes, for example. So we provide daily reporting to our clients through an online Tableau portal. This shows price movements each day and other useful metrics. So there's a daily portal and a weekly and a monthly portal, and each of those will have different levels of data. So the monthly being quite detailed, allowing you to look at specific competitors within your footprint, do some scenario modeling, so the impact of X% change on top positions and top performers. Okay, so how have motor insurance prices moved in the first quarter of the year? Let's look at that first. Right, so we've seen a large increase of most of our most competitive prices. So this is in January, the average of the top 5 increased by almost 8%. There's been some recalibration since then, and both February and March have seen average prices dropping down again. So the result overall is an upward movement of around 6% in the quarter. Looking back over the past couple of years, we've seen continuous price reductions since the COVID pandemic began. And although we've had recent increases, prices now are still around 10% lower than they were in kind of March 2020. So there have been undoubtedly been benefits of reduced claims frequency, but there are other external pressures which may make these current pricing levels unsustainable. And we'll talk a bit more about that later on. Looking more recently, over the past 6 months, so due to prices falling towards the end of the year, January increases have only brought rates to a position 4% higher than in September of 2021. So in terms of the impact of the regulatory change, perhaps not as big as we were expecting in terms of price increases. However, that kind of is driven broadly because of the kind of the price reductions that we saw to the tail end of last year. However, the average price movement conceals a variety of different pricing strategies which have been playing out. So the 4% increase over the past 6 months is a combination of larger increases of up to 17% we're seeing here, and also some reductions. So we're seeing prices for a particular insurer here dropping by 4% over that period. So this is looking at price movements for 10 large insurance providers. So this isn't a maximum and a minimum range of what's been observed. Rather, these are the typical movements by major providers. Okay, so then looking at those specific providers again over the past 6 months. So we have seen some continuing to increase prices following January. So the initial price increases went in, and then prices have crept up slightly further since then. And others have leveled off, or we've actually seen reductions following the initial increases going in. So there are a few different things that have been happening and different strategies that we are observing here. Some providers where pricing is lower than it was 6 months ago, we can see here, and that was driven by kind of larger increases earlier on and backed out as the kind of the impact of the regulatory changes on the market became clearer. Others have taken a more cautious approach, showing slowing increased prices following reductions towards the end of last year and leveling out more recently. So I think there's more to come in terms of movements, and it's interesting to observe the different approaches that have been taken over the past 6 months, and we'll look at what might come next later on. So that's a bit of an overview of what's been happening on motor at kind of a top line level, and then by some individual providers. If you have any questions, I should have mentioned earlier, please feel free to drop them into the chat. We'll have a Q&A session at the end, and I'll do my best to answer any of those questions that you may have. Okay, so looking at home insurance. So a lot of movement in car insurance there, but what's been happening in home? And this is where we would have expected the impact of the FCA changes to have had a greater impact, given the greater loyalty, the higher customer tenures and bigger back books that we typically see on home. But has that been the case? So let's have a look at that. As we'd expect, price increases on home have been higher than on motor, moving up 9.4% in Q1. And again, the pattern here is very similar. So we're seeing a big increase in January. And this is, again, the average of the top 5 prices and leveling out into February and March. looking at how prices have moved over the 6-month period. So increases we can see on home, which wasn't quite the same on motor. Increases starting in December. So that's resulted in kind of prices rising by 13% over the 6-month period. So changes went in earlier on home, and they were kind of larger in terms of the magnitude of increase that was observed. Similar to motor, we have seen kind of price reductions coming in earlier towards the end of last year, but coming up sooner as well, and kind of settling down more recently. So again, a similar picture, kind of large increases going in and settling down, slightly larger than we've observed on motor. Okay, again, looking at it by individual provider, there's a bit more consistency on home than we've seen on motor. So all of the top 10 providers for combined cover have put in significant price increases over that period, or apart from one. So there's the kind of an outlier here, but broadly there tends to be a lot more consistency being observed. And again, this isn't a maximum minimum range, but this is a view on how the top providers have moved during that period. And again, there has been some significant variances from this, and potentially looking at this is based on who's appearing in the top 10 more recently. But if we were going to go back pre-December, the picture may have been slightly different, because we have seen some significant variances from this in terms of much larger price increases being implemented. So in the region of 60 to 70% changes being observed for particular providers. So again, that's going to take them out of the most competitive positions. And again, this is looking at the current competitive prices. So even with this level of increase, insurers are still maintaining slots in the top 10 rankings. So what does that look like over the past 6 months? So although the timings have been slightly different, some providers moving in December and others in January, where the larger increases have been deployed, they've all ended up in a similar position. So the timings have varied slightly, but in terms of where they end up, it's looking kind of relatively similar. Some insurers have taken a more cautious approach. So we've seen more gradual increases being deployed here. So again, starting to flow through from December and into January, and then creeping up or leveling off. So depending on the size of the back book and how that's going to impact on the rebalancing of prices between renewals and new business, then there are different extents that insurers and brokers have had to move their acquisition prices by. Okay, now looking at contents only. So on home insurance, we saw a similar picture as motor and combined cover. So there's a large increase in January, which has leveled off into February and March. Overall, for the quarter, price is up 8.6% on the previous quarter. So moving up at the beginning of the year by 8.6%. Over the past 6 months, actually towards the end of 2021, we saw kind of bigger reductions being deployed in November. As prices came down in the run-up to the end of the year, which we didn't quite see the same thing on combined cover, and then we didn't see the same level of price increases being deployed for contents only in December. So those factors have contributed to a 7% overall increase over the past 6 months. So the impact of the regulatory changes, not quite as high as we've observed on combined cover. We did see a wider range of price movement. So that average figure that we've been looking at kind of masks some of the underlying activity and some of the differences in approach that we've seen by specific insurers and brokers. So we've observed a wide range of price movements, and in the top 10 we can see here changes for the past 6 months ranging from kind of a 2% reduction at one end to almost a 30% increase at the other. And again, this isn't the maximum and minimum range. This is a selection of the most competitive top 10 providers. So quite kind of a different picture than we're seeing on combined cover. And what does that look like over time? So we saw here things are relatively flat until we get into December, and this is where we're seeing the largest movements. They tend to have been there's a big increase in January, which then flattens out. So we've seen that the extent to which insurers have gone varies, and the approach varies slightly as well. So we can see increases in January, which continue to gradually creep up, as opposed to those which have leveled off, or one here at the bottom, which comes in, doesn't do much at all until March. So that's an interesting one. But then we can see that those kind of relatively large increases being applied in this instance. And then where price movements haven't been as great, or they haven't seen the same increases coming through, there's a bit more consistency in the approach. So we're seeing reductions coming in towards the end of the year, and then being followed by price increases in January, which then tend to level off over February and March, or come down slightly in the case of the insurer at the top here. So I think where the larger increases have been observed, there's been a bit less consistency and a few different approaches playing out there, but where the changes are closer to the average, then a bit more consistency in approach. Okay, so looking ahead, what can we expect in the next quarter? So what's coming next for general insurance pricing? Well, it's a difficult one to judge, and I think there's still going to be some price calibration taking place. So on average, we've seen prices rise in January and then flatten. However, we know that does mask underlying activity by individual providers, and that there continues to be a lot of movement, but there are as many kind of upward movements as there are downward. So that kind of the average for February and March is slightly misleading if you're interested in looking at specific competitors and how they are pricing, how that might be impacting on your own performance. So we're continuing to go through a period of rebalancing with insurers settling into the new competitive environment. And obviously that new competitive environment changing as other insurers do the same thing and try and kind of find the right place. So predicted increases. So prior to this, we were expecting increases of between 5 and 10% in Q1. So they have materialized. So I think there still remains some jostling for position. And as that happens, we would expect to see individual insurers and brokers moving prices, and perhaps significantly so, as they try and find their place in the new competitive landscape. Product development. So this is an area that's been very interesting. over the past 6 to 9 months. So we've seen several new products and product tiers appearing on the market over that time. And I'd expect these to develop further. So we could see more products appearing where providers don't currently have this approach in place, or where they may have not expected as much of this activity to take place in the market. They may feel that they're at a disadvantage through not having those additional product tiers and may start to develop those. So we may see more of them coming onto the market. We could see some of the features and the benefits change as providers gain experience. So as they kind of test and learn what the best approaches are in terms of product tiering and different brands, then we could see those develop and different product features and benefits appearing on the market as well. And we could see different pricing and footprint strategies playing out at a product level. So there are a range of different pricing strategies currently being employed for multi-brand or multi-tier propositions. So as providers gain experience and exposure there, then those are likely to develop. And also footprint. So it's not just about the difference and differentials in prices between the different tiers, but we are seeing some targeting of specific customers with specific tiers, and pricing can also be targeted, and price differentials can be targeted to reflect demand and likelihood to take up a particular brand over another. So I think we're going to see more in the way of product development, whether it's new products coming onto the market or whether it's enhancement and refinement of those existing propositions. And then there's strategy reviews. So I think we've seen the kind of the first stab at a new pricing approach and a new pricing strategy in Q1, but I think that will always develop further as we go forward. So as we settle in to the new competitive landscape and the first tranche of changes have been deployed, we can expect insurers and brokers to revisit their original strategies to say, are they still fit for purpose? Now we know what we didn't know previously. Would we make the same decisions? Do we want to change things in any way? So I think the back book versus the front book dynamics could be further developed. I think some of the approaches have been relatively blunt and there's more sophistication that could be applied there. Channel-based pricing is something that we may see become more widely used. So where insurers are reflecting on where their original customers were sourced and through what channels, how does that play out in terms of back book versus front book dynamics? So we may see some more channel-based pricing activities in the market. And the market context has changed. So the quote volumes we know have dropped off somewhat, and conversion has been dropping, while renewal rates have improved significantly for many providers. So I think there are different kind of dynamics in terms of the market context, which insurers and brokers will be considering, and pricing strategies could change based upon those. And I think kind of there's likely to be kind of more turbulence ahead for motor and home insurance pricing as providers get used to the new market context, the new competitive landscape, and their new product offerings. Okay, so that's the end of the presentation bit of the webinar. So we've got a few minutes left for Q&A. So if you have any questions, then please feel free to leave them in the chat, and I shall attempt to answer those. Okay, so I've got one here around the current economic environment and how could the current economic environment impact pricing. So the cost of living is going up, and we do see in these kind of difficult times increases in smaller claims where people may not have necessarily bothered before, and also increases in fraudulent activities. So those tend to push prices up. So there could be an impact of those. I think there's still some benefits of the pandemic and the lockdown in terms of claims frequency, which are enabling some insurers to keep prices down. But I think in terms of the current economic situation, then it would tend to suggest prices increasing. Could prices continue to fall? Potentially, yes. So that's one where it depends on the individual insurer's particular situation. So depending on how much benefit has been derived over the past couple of years from changes in customer driving activity and behaviours, then how much of a buffer is there to continue with that? As I say, I think that there are still those external pressures which are forcing prices up. So although there is still a benefit from reduced claims frequency, the cost is increasing, cost of parts, the kind of supply chain issues. There are a number of challenges that are being faced, which would tend to kind of, under normal circumstances, result in kind of price inflation. I think it is still a very unusual time. So both with the impact of the pandemic and with the regulatory change, I don't think we've been through anything quite like this. So again, it's a difficult one to predict, and I think there are pressures both upward and downward. I would expect, however, over the kind of medium to longer term prices to have to come up. As I said earlier, we are still 10% lower in terms of motor pricing than we were in March 2020. At that time, I had expected prices to start to come up. They had actually in January and February had started to come up, and I thought, well, this is the turn of the cycle. But actually, COVID kind of knocked that kind of off balance. So yeah, I mean, it's difficult to say, but I would expect in kind of prices to start to come up in the medium to longer term. Slides will be available afterwards. Yes. So if you want to just contact me, I'll be able to send you a copy through. Okay, so there's a link again. So if you want more information on our kind of market pricing or anything else that we do, then please click on the link, or feel free to contact me directly. You can get me on stephenkennedy@pearsonham.com, or you can contact me on the number on this slide. Thank you for your time, and I look forward to updating you in 3 months. Thanks very much. Bye.